Money Vikings. All right, welcome back. Money Viking G here. I've got a very interesting one for you today. I want to talk about net worth and net worth in the United States, and not just share the numbers, because you can look the numbers up, yourself any second and see where you compare, and you see some of them up here already that I've got. But what I want to do is talk about why calculating your net worth is critical, and what you can do to increase your net worth and kind of put the whole thing in context. And I got some moving this stuff around a little bit. Okay, so here's what I want to say about net worth. Why, number one, why is it critical to calculate your net worth? It's critical to calculate your net worth because it's a snapshot of your overall financial health and whether you are treading water, losing ground, or getting ahead every year. And for those of you that don't know, there's a very basic way to calculate it. You take all of your assets, things like the value of your home, the value, well, you could put a car in there, but a lot of times I actually like to keep things like cars and personal property out because they don't really go up in value. So anyway, some people put their car in there, but basically it's going to be your house, any investment accounts you have, any savings accounts you have, any bond certificates you own, any business valuation that you have, any rental properties you have, real estate investment trusts, etc., for old 401ks, old IRAs. You take all those savings accounts, CDs, etc. You add all that up, so it gives you a total. Let's say that total is $500,000. And then you subtract all of your debt and liabilities. So you might have a mortgage for $300,000. You might have some credit card debt for $50,000. You might have a car loan for $50,000. And so you get $400,000 in debt, but you have $500,000 in assets. You take the $500,000, you subtract the $400,000, and you have a net worth of $100,000. It's kind of this like funny sort of exercise where you could basically sell everything you own, pay off all your debt, and what's left, right? So if you were just to get a clean slate of life, and like I said, you just sell everything you own, and then you owe a bunch of debt, you pay all that debt off, whatever's left in the savings account, that's essentially your net worth. So as you can see, it's a critical number to understand because you want it to steadily go up over time, because you want to be getting debt shrunk and you want assets to be growing. So what are people's net worth at various ages? Because it's very, as you can imagine, it's very age dependent. So if you're 20, 25 years old, you're starting out and you really don't have, you haven't had a lot of time to build any wealth. You haven't really been in the workforce that long. You probably have college or student loans or technical training loans or whatever to get your certifications so you can get a job in your chosen field. And so you're just starting out in the workforce. You probably don't own a home yet, and hopefully you're not in huge amounts of debt. But typically at that age, a lot of people start out negative. So I remember when I was starting out and I just got out of college, maybe I had a few $1,000s in a savings account, but I owed $20,000 in school loans. And so at the end of the day, I think I probably started out with like a negative 15,000 net worth, right? I didn't own a home. I owned a car. I owned a Ford Ranger or something that was paid off. So I guess that was maybe worth $5,000, but I probably had a net worth of like, let's say negative $10,000. Well, then over the years, I start paying that off. I start contributing to a 401k. And then, maybe 10 years down the line, I have like a condominium or something. And before you know it, I've got that paid off. And in about a decade, maybe I have a net worth of like plus 50,000 or 100,000, something like that. So let's go through some of the numbers and talk about it. And then we'll talk about ideas to increase your net worth. So the median, I like to use the median. This is on Motley Fool, and then I Googled it as well. I like to use the median because the average is highly skewed in a lot of ways. The average in the country, I think, is like $1 million. But you have to understand, you've got the Kardashians and the Bezoses and the tech overlords and you've got high net worth families, you know, you have celebrities in there. You know, these people might have $100 million or $1 billion. So everybody else, 90% of the people have $100,000. And then there's a few people with billions of dollars. Well, that moves the average way up to like over $1 million. But that is not a good reflection of reality. Most people don't have $1 million net worth. So the median is the number in the middle where half the people have more and half the people have less. So it just is another frame of reference. So what's the median here? If you're 18 to 34 years old, it's 39,000. So that was that example I was giving where someone is basically just starting out. And you know, maybe by the time they're 30, they're up to this like $39,000, $40,000 number, okay? So let's go down and see what else we've got. So from 35 to 44, you see the same number down here. It's $135,000 is the median. So at that age, typically between 35 and 44, people probably own a piece of property. So that might be the highest amount of net worth they have. One advantage of owning property is that you build equity over time. So as you pay down the mortgage, every month you are paying interest, which is kind of sucky, but and you're paying insurance and you're paying taxes, but there's a certain amount of that money, maybe it's a few $100s, maybe it's $500, that actually is paying off the loan and helping you build equity over time. So that's actually kind of adding to your net worth column. So that's probably typical around 35 to 44. 35 to 44, those are, you know, those can be challenging years. You're really getting into the thick of things with your career. You have children to raise. So, you know, there's a lot going on there. Now, from 45 to 54, as you can see below here, this bumps up to 246,000 right there. And then from 55 to 64, you hit this 364,000 median number. And then it kind of tops out at like 65, right? At 65, people probably have the highest amount of net worth that they will have in their life. That's probably, you know, pretty much the age where that happens. And as you can see, it starts to go down because people start drawing off of that for income. Now, hopefully they have their investments growing at the same time and they're kind of pushing against that tide of decreasing that number. But that's the median right there. Let's look at a few other things. So median net worth of Americans under 35 in 2025 was 39,000. And net worth increases with age. We know that. People ages 65 to 74 have the highest net worth because of assets that increased value over time. And then homes that are paid off. That's key as well if they have a paid off home right there. So let's see here. There's an interesting Yahoo Finance article. If you want to be in the top 25%, I think this is a great goal. So, you know, there's these median numbers, but we kind of want to go, and especially for Money Vikings audience, you want to be going beyond this. So if you want to crack the top 25 or the top quarter of net worth in households, you want to have a net worth of 659,000 right there. And it says that includes everything you own, homes, investments, and savings, minus any debt, as I described before. Okay, now what if you want to go beyond that? So if you want to go beyond that, if you want to be in the top 10%, here's the big number right here. You want to go for a net worth of 1.9 million if you want to be in the top 10%. And that creates actually, you know, 1.9 million is a really nice number actually, because if you reach your 60s, and you have 1.9 million, and then you have Social Security coming in, you have a lot of your medical taken care of through Medicare, then you are, you know, really looking pretty good in terms of comfortability, right? So to reach that top 10%, you know, it's a tall order, I have to say, and it's one of those things that probably does take decades. But I would say if you're young, if you're on the young side, I think you have a lot going for you to hit this number. So what I would do if I was, you know, young is number one, you got to get the contributions to your 401k as high as possible. And as I've always talked about for years, you have to automate this. You really want to be mindful of debt over the years, especially I think things like car loans. That kind of stuff is really going to eat away at net worth over time and create a pretty, you know, huge liability sinkhole that can be challenging to deal with. So that's another thing that you're going to want to consider. You know, if you want your money to really grow over time, you have to think carefully about the kinds of investments you're in. So, you know, I'm a big fan of equities, but in diversified portfolios. I don't really like individual stocks as much anymore, although I have some, but I really do like things like index funds and ETFs. I think those are, you know, much better, and that's where you're going to get some of that 8 to 10% average annual returns. Now you compound that over many years, you have the dividends reinvested, and you can really start to approach these numbers of 1.9 million. Now, that's probably also combined with the fact that that's someone who has a lot of equity in their home, or maybe they even own a couple rental properties, etc. So that's going to add to that net worth figure as well. Or maybe they own a small business that has a certain value. Small businesses are typically valued based on, you got to look at the risk of the business, and then you have to look at how long the annual cash flow and profit has been. And it's, you know, businesses a lot of times sell for some multiple of the annual profit or cash flow. It's like, you know, if the business makes 100,000 a year, you know, it might sell for 7 times the annual profit. You know, maybe it'll sell for $700,000. It'll be valued that way. I'm sure there's people watching this that are much better experts at that than I am. So, you know, leave a comment about that. But anyway, that's going to give you a sense of where to go. Now, the 0.1%, that's 62 million. Personally, I'm not going there. That's not happening for me because that's I think that's for movie stars, sports stars, and tech titans who, you know, do certain things. And hey, great, you know, good stuff. But I think the 10% for us middle class wealth builders, I think, is quite possible. So the 1.9 million is definitely, I think, a goal to go for. Now, the other thing is the 1.9 million, you probably need a certain level of job security, and you probably need a certain level of income. You're probably talking about someone who's pulling in at least 6 figures, you know, at least has cracked 100,000 or more a year. I would see a net worth of 1.9 million, you know, on a $40,000 income to be a really tough thing to reach, because again, it's just how much you can plow into investments and how much time that has to compound. So there you go. Those are the numbers, and hope this helps you guys, and we'll see you on the next one. Thanks for watching. Bye.